For those serious about becoming successful, consistently profitable options traders, now is the time to build skills in technical analysis, market analysis, and implied volatility to get those results. We have multiple memberships, starting with our Go membership that teaches rules-based trading and our Pro membership that teaches more subjective trading. For more information, go to lockeinyoursuccess.com/memberships.
Hello, everyone. Welcome to our special open house for Market Outlook. It's January 27th, 2025. We have two groups of people here. We have people from our Pro open house who are also getting access to this Market Outlook, and we also have some Go members and some other general publics that are here. So welcome, everybody. Before we get going, so I remind you, the presentations for educational purposes only. We're not broker dealers or financial advisors. We're not making any specific trade recommendations. Also, please be aware your risk in trading can be substantial. So please make sure you are aware of all your risks prior to placing any trades. Also note that if we do show any trades and results, please consider them to be hypothetical computer simulated trades and results. They be believed to be accurately represented as possible. Keep in mind, live results can vary from simulated results for many different reasons. Before we get going here, since we have our open house and we have a lot of new people on board, I just want to talk about a little bit what Market Outlook is about. It is not about you trying to follow me from, oh, John says the market's going to go up or the market's going to go down and I'm going to make this trade, right? It's about teaching you how to understand how to read price movement so that you can read price movement yourself and determine real time how to trade what you're trading as price is flowing into the marketplace and news is happening and all this other stuff's happening in the background. So what we do here is we're going to teach you a lot of the methods I use and other people use to, first of all, determine what the probabilities of certain price moves and directions are at any given time with the information that you have. But more importantly, right, and this is much more important than trying to pick out a support level and thinking it's going to bounce, right? That's like amateur time. It's about watching the price movement or the pricing information come into the marketplace and understanding when probabilities of certain things change and what it means. So in other words, I have a support level, I have a resistance level, I have in this time frame, right? Because we have different time frames and we have stuff across indexes we're looking at, and I have this pattern playing out. And this movement means that I should have a move of a certain magnitude to a certain point. Okay, great. And we can talk about that. We're going to have a little bit of that today, maybe, when we talk about things. Wonderful. But what if that something else happens? In other words, what if we break that level? What does that mean? And that also has an implication, right? That shifts probabilities and that shifts price movement magnitude, and you should know what those are. And by understanding this information, you can apply that to your trading real time and make really, really good decisions on trading, whether you're more towards the positive theta side or you're day trading. All of the principles that we teach here apply to all these different time frames and can be extremely beneficial in helping you increase your returns, set up better risk-reward trades, prevent yourself from adjusting when you shouldn't be adjusting and stuff like that. So we hope you enjoy this session. Some of you are going to understand maybe a lot of what we talk about. Some of you are not going to understand everything because you haven't had the background that we have here. If someone were to join Market Outlook, you do get access to past Market Outlook sessions. There's lessons and different types of lessons, and we go over different types of things in every Market Outlook session that we do. Okay. That said, let's just get going here, and we'll take a look at last week. So last week, we had a bullish sentiment in the marketplace, thought the probability of price movement that the price was going to be up last week and for the week, and we had quite a good size movement. Our implied volatility market had an implication that that level would be somewhere around 6,085. We exceeded that level by a small amount. And we ended up having, like I said, a decent size up move. This is a very bullish chart pattern playing out, right? So we have our previous swing highs. We have a cup and handle pattern here. We have a 2B reversal, which is part of the reason, right, for our thoughts that the market's going up last week. We have our longer term price pattern target off of a different level here of 62.22. As of Friday close, this is all very bullish posturing for the market. And from there, the technicals tell us that the market's going up. We have news in the tech sector that is going to, looks like, at least at this point, right? Because these things can change fast. I mean, the market could be flat and the futures could be up by the time the market opens. And you can play the futures the same way with the same techniques that we use in market outlook. But right now, with the information we have, looks like we're going to open up on ES is down like a 127. That's going to put us at what, a little under 6,000, 675. Probably right around this point here, right? So it looks like we're going to probably try to open at our support point, which is normal, right? That would be a normal move in the index. And given that the overall, if you look at let's just back out for a minute. We're going to look at the our longer term. Our longer term charts are also very bullish, right? You can see we had a cup and handle pattern here. We had a breakout of that handle. We had a little bit of consolidation at the 50% level, which is pretty normal. We had a bullish candle sit in here. We had a pattern. We're going to basically have something that looks like this. Our expected move is to 50% level, which lines up somewhat in alignment with this pattern. So our expectations would be normally a move to 62.71, maybe a bit of a stall or pullback to test support there and then go higher. That's the normal, most probable market movement based on price action, that knowledge that we have coming out into play. Let's see how this changes that. So chances are we're going to get and we'll come back into a closer time frame. The reason for doing that is the overall tone of the market is very bullish. The overall tone of price action is very bullish. The tone of price action is bullish, even if and we should understand this, right? Even if this comes all the way back down into like this level here of 58.85, 5,900, we're still very bullish. Right, so we have to take that into consideration. We have our daily levels here that some people, like your amateurs, are going to freak out if we break maybe the swing highs because they think that's a support level. But the reality is our longer term is bullish. So what we want to do is, and we have the news that we have is more or less a tech sector news story. So it's not like the entire market. We want to look for opportunities to buy this, because what's likely going to happen is we're going to get some sort of a sell-off from the news, and then they're going to come in and they're going to use that as a buying opportunity to push the markets higher. So the question is, where does that happen? Before I go any further here, I just want to go to the new drawing. So this was last week's expected range. This was how we exceeded that. Let's go to this week's expected range as of Friday. So we have our daily expected range, which we're probably going to exceed this morning, and we have our weekly expected range. The fact when we open up past our daily range of what was expected on Friday, that is essentially telling us that some sort of news came into the marketplace that wasn't expected on Friday, right? I don't know if that's going to happen on open, but since the futures exceeded that level, that probably is the case, right? And I believe that is the case. We've had some news that come into place that was not expected on Friday. That creates a bit of a sentiment change, at least in the short term. It doesn't change anything else that's going on, though. The charts are still bullish. So what do I think is the best opportunity for a long play here? And that would be a move into this range here. So we have this uptrend line's a little bit high. We had a 2B reversal off our support point. Okay, so 2 weeks ago, I guess, we came in. We had a daily move that kind of plunged under our support level. We closed back above it. That's very bullish. We would expect this to go up and exceed and come into new all-time highs, which it did. We broke this level. That's also bullish. And a normal retest here would probably be at 6,040. And we might see that today. In other words, we might see a move down to 6,040, maybe play a little bit past that level, and then end up the upside in the market may bottom there. We'll want to watch the price action that comes in, but I would look there for an opportunity to buy or take a short bullish. If we happen to open or just trade under there and break down, then this area right in here is where I would be looking for. I can move that to buy. So if it were to happen today, for example, it would be here. If it happens a little bit later in the week, it's going to be a little bit lower price. But anywhere in this area in here, we're looking to go long. Meaning that if I have neutral positions on that are taking a little bit of pressure to the downside, I want to use techniques that we use in the Pro membership to reduce structural risk to the downside in case we do have some sort of a market collapse. Reduce structural risk to the downside, but hold a bullish posture and be open to the upside, because if we come down here and we bounce, it's probably going to be fairly aggressive. So we want to be positioned in that manner. Okay. As of right now, like I said, the information we have, we're not quite sure. It looks like we're going to open down. We don't know. If we recover and go positive right away, then that's just a long play, straight out long play. Chances are we're going to open down under our swing highs, probably down in this range here. Well, what are the actual numbers? So down 128 off of 6128. Yes, so 6,000, right? So looks like we're going to try and open right around our weekly range. We want to watch that level to see how it resolves. If we're doing short term, if we're thinking about adjusting, the same thing. We might want to adjust. If you're the type of person who's going to come in and intraday adjust, which I generally don't suggest if you don't understand price action. But one of the things we say, if you adjust intraday based on short-term price action, you adjust back out of that trade intraday based off short-term price action. The amateur is going to come in here and freak out and say, "Oh my goodness, it's down. I'm going to make an adjustment." And they'll make this major adjustment, and then the price is going to reverse on them, and then they wait until the upside adjustment point to make an upside adjustment, right? So they're using short-term pricing information to adjust a long-term position, and they're not backing out of it based on short-term price information. They're backing out of it based on longer-term price information, which is a recipe for, losing trades, basically. So we want to avoid doing that, and we want to make sure that we keep our time frame with the types of trades we're doing. Like I said, I see this down move on the open as an opportunity to buy. Certainly, I like the 6,000 range or the weekly expected range. One of the things that we talk about in Market Outlook here is that the weekly expected range is considered a support point in the marketplace, and you can adjust your technicals to where you think it is. So in other words, if I'm here and I think that my support is here at 6,070, that's true to some extent. That's where the daily range put me. But our more significant numbers, the weekly range, where does the weekly range put me? oh, it puts me here. Does that make sense? Well, yeah, we have a swing high here. We have a pivot point right in here. This is definitely a support point. A move that comes down into that point generally is a good place to buy. We might want to watch and see if our like 2-minute chart, for example, puts in some sort of a reversal pattern to buy. Or if our 2-minute chart looks weak when we open up, we can take a look at our internals that we talk about on our flexible grid to see if they're representative of that type of down move following through, or if they're representative of that type of down move stalling or reversing. We can bring all these into play to make that decision of, do we actually go long here at 6,000 or do we wait it out for our more significant level, which is down here, which for me is definitely a area where I'd be interested in going long. So that's my thoughts here. Reasonable probability we might break the weekly range this week. If we don't, like if we hold this range and bounce today, that's pretty bullish. Like it's like, yeah, they're just going to shrug this move off. My guess is that the institutions are going to try to panic the traders. This is what they usually do. They try to panic traders and they try to flush that level. If they do that, then we're probably coming down into, depending on whether that would happen today or tomorrow, would be down in this range here. And of course, if for whatever reason we got all the way down to here, which would be unlikely, that would be a really, really good like long option play, right? So when we're trading, we have and we want to go long, we have verticals. I mean, we have a lot of options, but two of the main ones that we use is like if we wanted to do bullish, like bullish verticals, and those are good for when our expectations are for a relatively light price movement, like if we're playing days that don't move a lot. Like for example, last Friday was a day that didn't have very much price movement in it. Not really a good day for playing long. If you're doing a 0 DTE, for example, not really a good day for playing long calls and long puts, because we don't have the movement in the market that's really going to be able to exploit that. When we're getting these shorter movements, you can get a pretty nice risk reward ratio on a vertical, and it doesn't take very much price movement at all in order to make money there. If you go to the 2-minute chart for last week, this is very tradable price action, even though these cycles are only about $10, because we have 5-point verticals, right, that we can play, and we have good risk reward ratios, and we have some really nice probabilities where we see some really good breakdowns and some decent bounces here that are at least 10 points. That's a playable price range. 0 DTE from a directional standpoint if you're doing verticals, but not really if you're doing calls and puts. You have to be very well timed, and at the end of the day, like here would have been okay if you did a 0 DTE call. It's the end of the day. There's not much price premium in them, and a 10-point move, you can make something. Early in the day, you can't, right? So just some things about relating back to the types of options you might want to use, and trading you might want to use on a short term. Of course, all that's directly transferable into the longer term. So again, my thoughts are I'd be looking for buying opportunities off of this drawdown today based on that. So if anybody has any questions, feel free to put them in. NDX is the index that's being most impacted by what's going on today. We have a primary support level here. Our weekly range, by the way, is here, right? So the market's telling us as of Friday, I don't do daily ranges on the NDX. I often don't even do weekly ranges, but I threw it in here today because of the down move. So we're looking at a 800-point down move open based on the information we have now. That is going to be slightly under 21,000. And look where that is. That's like right here. So it looks like the index, and that's a huge move for the NDX, right? So you can clearly see this is tech related. Like it's barely affecting the Russell, which is the small caps. It's affecting the NDX like this huge amount, 1,000 points, and that's a big move for NDX. I think it's like 3.5% or something. But that puts us down into the weekly range. Again, this is an area that may be a buying point. Let's remove our drawing here. And I'm just kind of seeing where stuff is putting us. Yeah, this is going to put our, this is going to put us down. Let's see, the open's going to put us down 770 and at 22,770 off 20. No, I'm sorry, off 21. Yeah, it's going to be around 21,000, right? So it's going to be right around here. Yeah, right around this area. I am looking for opportunities to buy this. So this is going to put us in a buy range also, right into here. Our bottom buy range, like I really like this level down here at around 2005. If it reaches that level, I don't think we're going to see that. I think that I'm looking for buying opportunities here, maybe a little bit after the open here on the NDX. Okay, so questions. How do you determine weekly range? That is a lesson that we've gone over many, many times in the market outlook that you can go back and look at the recordings. I don't have time to figure that to explain that right now. But in short, right. So if you have think or swim, I can throw this up here. If you have think or swim, you can look at the end of the week after the market's closed on Friday, and you can come in here. And one of the methods, we have two methods. We have a 16 delta method and the point method. Point method's really easy in think or swim. There's other ways you can figure out the point method, but this actually does it for you. And it'll tell you right here. You just go to the day when the markets and the futures markets are closed, and you look in here, it'll tell you it's plus or minus 407 points, right? In this case here, you can mark it out on your charts off of the asset price. We determined this in a couple of ways, though. I'm not going to go over them all. Virginia's saying, would you look at the Fibonacci level of the retracement of the recent move up? If it's over 50%, it's less likely to bounce back strongly. Okay, so you can say that, right? So we have an up move. Let's see here. We have this here. We have this up move. We have our 50% level, which is generally considered a potential support point. We're also having some downtrend line that comes in here. This is a good level for a bounce, right? And a lot of times we might expect the market to come down to this downtrend line. Let me zoom out, see where that actually puts us, right? So we have a confluence area here. Like this is a pretty strong point. So everybody should be aware of this, right? This is pretty clear. This is a pretty important level. Like, okay, so right in here. We have 20 and 50-day moving averages. We have downtrend line off of our breakout here. We have, diagonal support area. This is an important level on the NDX, and it's also a level that you want to see as a buy point. But what we want to do is we want to be aware that it's an important level and not expect it necessarily to bounce there, right? So by that I mean is a lot of times you'll get a reaction or a flush out under that level, and it doesn't mean the market's going to continue down. But what it means is if we can recover that level and close back above that, that's very, very bullish, right? So we're going to use this level as we'll call it a reference point on where the traders should buy the market and trade it higher. meaning that if we'll use this point as what we would normally look at as a to-be reversal, right? So normally, like we'll have a support point here. Well, let's say we'll call that a resistance point, and we'll have a support point here. And this is our support, and the amateur especially is expecting us to come down to support and to bounce here. Now, I don't know what the price patterns or whatever's going on over here, but I do know that this is a support level, as in our 50% level here, you could say. This is our support level. I don't know that it's going to bounce here. I don't know that it's going to stop here. But I do know trading under here initially is considered bearish. But a trade, if it trades under and then recovers back in here, this is a to-be reversal. Should be considered like a to-be reversal and very bullish, meaning we're probably going to break out of the swing highs coming up into here, right? That is basically what we're talking about. We have the if-then scenarios, right? If we crash, if we trade under here and close under here, then we have to be able to switch our opinion relatively quickly. If we trade under here and close under here, that is considered bearish. If you want to make an intraday adjustment on your trades, you can do that. That's fine, right? Because that's considered bearish price action, and our immediate thoughts off of that is hey, the market should go here, right? But in the same context, I get a to-be reversal off that level and close above it. Now my opinion has switched to very bullish. And if I made that downside adjustment due to this move, I should be backing out of it here. I shouldn't be waiting till I get up here, right? So I should be backing out of it there, because now that's very bullish price action, and now the probabilities favor that we're going to go out and break higher. So it's the same type of thing here. Yeah, if we pull under our 50% level, then we start closing under there, that is technically bearish and implies that we're going to continue down. And however, we want to keep in mind that if the market price does reverse, this is what I mean about new information coming into the market. If the price does reverse and close back above it, now that tells us we're going to here. So we want to act on that price information maybe a little bit earlier than sitting and hoping, right? So in other words, if I take a bearish trade off of this, that's fine. When we talk about this in the pro membership, and when we start doing short-term stuff and start playing around with that, it's fine to take that trade. It's fine to take a bearish trade here. It's like a lot of people, they go, well, technical analysis, you're picking direction. It's like, no, that's like almost the last thing we're doing. It's like we're not taking direction and holding that opinion. We're looking at the price action in the marketplace and say, okay, this is bearish, and yeah, we may pick that direction, but we'll back right out of that instantly if we get the if then scenario plays out where it shifts down and then pulls back up again, and we know where to get in to be bearish, where if it follows through, we're going to make a ton of money. If it doesn't follow through, we can take a very small loss, right? So we want to set our trades or structure our trades around that concept. And then if we get that to-be reversal, we're switching direction and we're going back, right? It's about understanding the price flow into the marketplace and understanding, whether you should be taking or it makes sense to take a trade or not take a trade at any given time. Let me clear all this mess out. Look at some more things. Yeah, if it's over 50%, if it's over 50% and it bounces back, right? So if the retracement's over 50%, like this is what the question said, is it less likely to bounce back strongly? And the answer is no, not really. It's we want to watch that. That's an important level. We want to watch that for a bounce back. And if it does bounce back, then we want to take that trade, right? So that's a different way of looking at it. Tech news is competition of Chinese. Yes, Virginia put that out. Chinese AI DeepSeek, right? So Chinese AI has a company called DeepSeek that's threatening the profitability of our big companies like NVIDIA and so forth. People are freaking out. No, yeah. Am I thinking the SPX will go down for the week because of the futures? No. I think I'm looking for bullish opportunities for the market to go up. So it looks as though we're going to open down, but we're looking for opportunities to buy this because we believe it's going back up. I usually don't base directional moves even for the day a lot of times off futures, but sometimes we will. I'm concerned that this is breaking our really bullish pattern here, which would be our bullish scenario. If you go here and here, is for the market to bounce somewhere here and continue higher, which would be normal given the patterns we had last week. But we know that that's not going to happen. We know that we're going to open here. This is still bullish, right? So we still think the market's going up. If this had broken some sort of a serious level to the downside, then we may think we're going back down. But I don't know that we're going to be higher than we were last week necessarily, but I'm looking for bullish trades off of this. New information may come into the market that changes that. So we want to keep that in mind. Chris put in a explanation of figuring range. So, okay, thank you, Chris. It seems like a lot of the pro trades are contrarian entries. Would you say that is correct? IV finding technical turning points. Right. So this is a reference to the pro trades that we use. I would say that's, I guess it depends on your definition of contrarian. If you're saying, like, I don't think a bullish trade off of this is a contrarian move. And you'll say, what do you mean? I'm panicking, it's going down. And it's like, well, no, because everything in the charting's bullish. Like if I'm on weeklies are bullish. Anything longer time frame is bullish, and we're just turning into a support level. So where the market's, like I said, the trend is your friend, and they say that for a reason. The trend is your friend because, first of all, the markets go up most of the time. Right, regardless of, you need to identify that as a trader. At any given time, I look at the NDX, is it likely to go up this week or down this week? If I say up this week, probabilities are already in my favor, right? Because most of the time the markets go up. So most of the time, like I'd say 80 or 90% of the time, 80% of the time, I'm looking for markets to be higher, right? Whether the futures are down, whether they're up, whether they've been up, with the exception of when we hit price pattern targets, right? I have this here, I have this here, I'm going to measure this, that's going to put me to a target, which is going to be right about here. I get a breakout, I'm moving to a price pattern target, so now I'm looking to be bearish up in this range, right? For a short period of time. And off that thing, I'm looking for a bullish reaction. So if you call that contrarian, then I guess then the answer would be yes, right? So everybody has a different definition of that. But yeah, whenever the market's dropping a lot like this, I'm always looking for where's the market going to go higher? Where's it going to go higher? Where's it going to go higher? Where's it going to go higher? And here, and that's the way I trade. It's not for everybody, but this is a good example here, right? I get a big move down here. I get an intraday flush. This is exactly what we're talking about on today. This happens, like if you look at this, it happens over and over and over and over again. It's nothing, it's nothing new. It's not a new pattern. It's not a guess. A lot of you look at options probability or whatever, or standard deviations. If you were to go back and see how often this happens, it happens like all the time, right? So it's like a highly probable move. I get this move here, and this is the same. And this also ties into the exact same question we're talking about Virginia. If we get a move under the 50% level, does that mean the market's not going to come up hard? And the answer is like, well, no, not really. Intraday watching this is bearish, right? If I'm making a downside adjustment in my position, then that's fine, right? I can play that. I can take a bearish trade off of that down move. But as soon as we recover this level, which is an important level, now I'm very bullish. So I'm taking that trade is bullish at this point because now I'm going to probably get a decent size move up, right? And this is in chop, and this really shouldn't, right? So realistically, this should have come down all the way back up to here, but it didn't. But again, that's new information coming into the marketplace that we didn't reach that level, and that's kind of weak. And you can kind of see the breakdown, and we're going into chop, and so forth. That's a different story. But in the context of what's going on today, we're getting a big down move. We're coming into and we're challenging a 50% level. We may go underneath it. If we go underneath it, then my first inclination is we're coming here. But as soon as this breaks and reverses higher, say on like a 15-minute chart, I get a nice close back over that level, then that's basically telling me, oh, wait a minute, no, we're going up in here. We should understand that, right? So if I had a longer term position, if I took a short trade here and I start closing above here, then I want to flip direction, right, on time frame, because the information coming in the market's telling me something different. If I am if I was in a longer term position and I made a down adjustment because I thought, I was in trouble with the downside and I was panicking intraday, I want to flip back out of that adjustment, not wait until 4 days later when the market's up here and then flip out of it and then experience the down move, right? I want to flip out. So time frame is very important, and Chris is bringing that up. I think it's time frame. Pro trades may be contrarian in the short term, but are playing with the longer term trend. I think that's a good way of putting it, Chris, is having that understanding that we are, we see what's going on in the short term, but we're also aware of what's going on in the long term, and so forth. And there are times when we take these, longer term breakdown plays when certain things are happening and certain technicals play out in the marketplace. But I'd say 80 to 90% of the time, when things come down a lot, market's going to want to trade up. So I'm looking for the point where the market's going to want to trade up. I'm looking for the evidence of pricing information coming in, telling me the market's likely to trade up here. I will take that trade. And of course, if that level fails, then I'm out of the trade. And then if it's recovered again, I'm back in, right? So that's the way we're playing this in a lot of the pro trades and we're playing that either by entering positions or exiting positions or making adjustments, right? They're all reflective of what's going on and what's the highest probability of move playing out in the marketplace. So anyway, NDX, like I said, buying opportunity in this range here. This is going to be our important point. We get a strong breakdown of that, then we're probably coming back down, maybe retesting these swing lows, especially if we got a close under there. But this is going to be our point where we're going to say, oh, yeah, this is probably going to go up, and then take that trade. And then if we are looking at the Dow, this is it's affecting the Dow 300 points. That's really nothing for the Dow nowadays. But we'll see what the patterns are like. This is where we are here. Not the strongest index anymore. SPX was at all-time highs. This is a little bit lagging, right? So we saw some stuff rotating towards SPX and so forth. Our support point here in the Dow is going to be basically this level here. In combination with our moving average and our trend line, right? So right in this zone here is a good buy point for Dow if we get there. Let's see, we're only talking 300 points though. So 300 off of that is what? We'll call it 400 points, 44,000. 44. Again, I'm estimating, right? I'm not like getting too crazy. It looks like this move down is barely going to break the low side of this candle. Like our short-term support's going to be here at basically this range here on the Dow. It looks like we're probably going to try and hold that. If we hold this, this is pretty impressive. Like if the NDX is down that much for the Dow to hold this level. Again, it's not like a whole market breakdown. So this is one of the other things we want to look at when we do our cross index. Is this like a whole market breakdown, or is it just like kind of a tech sector breakdown? And it's just kind of a tech sector breakdown. If it's a whole market breakdown and we have bearish signals across all the indexes, it's very different than if we have like one index like the NDX or the Russell just breaking down. So it helps bias us towards being more bullish on that index. In other words, if I have one index that's really breaking down and the rest of the markets, the SPX has got a decent move because the SPX is so tech heavy. But the Dow that's less tech heavy and the Russell that's even less tech heavy are not that bad. Like 22 points down on the Russell isn't huge. If those are holding levels, then that's kind of telling us that we're just getting this little flush out in this sector, or maybe a little bit of rotation out of the sector. And we're just waiting for an opportunity for it to go up. Right. We have a lot of things that nuances that we can look at that seem like a lot at first when you first start looking at this stuff. But, once you kind of get used to it, everything just kind of comes together. So, so a bounce here again would confirm our bullishness. This is our primary support point, though. This is definitely a good buying opportunity for the index down here at 43,000 if we happen to get down that far. And then, of course, we have our Russell here. This is the daily range expectation for today on Russell as of last Friday. And then, of course, the weekly range as of last Friday. Just so that we can see the week before. This is what the week before looked like. We stayed well within weekly range, or we basically hit our weekly point range. We hit our, this is our expected level, right? So this is our pattern on Russell. So for guys who are a little more experienced, you should see this as an inverted head and shoulders pattern playing out at a previous level here. A break higher here is bullish, and we could set a price pattern target off the depth of the head here, which is probably, if I had to guess, going to put us somewhere right around, right around in this zone up in here for the upside. So this is it's not bullish yet, but it's a bullish pattern that looks like it's playing out. We're obviously going to pull off of that about 20 points or so. So 20, 30 points puts us, we might cycle back down into here. So let's see here. Let's call it 2270 just to make it easy on us. Yeah, that's right in this range. So it looks like we're just going to cycle into the channel range here. Let's see what this week's daily range puts us. 22. Yeah. So we have basically, let's come in here and see what we got going on. Yeah, so I like something like, this for a projected channel, right? This is basically an inverted head and shoulders pattern playing out. Our support point for the weekly range would put a shoulder here at 2250. So any move down into here, I don't find particularly concerning. I guess that's a good way to put it. Right. So if I go to 2270, 2260, come in, I don't find that particularly concerning. It's just pulling into it's pulling into our weekly range support level. It's pulling into where a kind of expected channel would be. Again, I know we have trading underneath that, so you could also put in this here for a lower side of channel. So I'm looking for two main areas to go long here. I'm looking for basically this area here, which is weekly range, lower end of uptrending channel. I'm looking for, if we break that level, I'm looking for down in here to go long, which is going to be the widened channel based off of news. Okay, so that is the two areas I'm looking to go long. Why am I looking to go long? Well, my longer term trend's up, and the market usually goes up, right? So if I'm looking at this at a more, if I pull these out, and I come into here, what's our longer term stuff doing? Our longer term looks if I was going to do an uptrend line, looks something like that. If I was going to do a channel, looks something like that. This is, a really good longer term buy point for the index. If we get back down here, realistically looking at this, we should hold this level here. I would kind of expect this level right here to hold on that. Let's see what that looks like in the daily. Yeah. So this is our important pivot point. I see this as an important pivot point, right? We might want to box this out a little bit because we did this off the weekly, but I see this as a I'd probably go all the way down into here. A bullish level or a buy level in the index is anywhere in this area here. Again, we can look at our shorter term patterns to see if it's playing out. So as of Friday, of course, this was a bullish close, but it looks like we're going to pull down into here due to the news, which isn't too big of a surprise. Let's see, notes that I have here or questions. Thanks. Oh, yeah. So just Chuck is thanking Chris for the weekly range. I hear John talking about daily range. Can you please enlighten us? The same thing for daily range, as Chris said for the weekly range. Coming in here, looking like the daily range. You want to do this when the market's closed, after the market's closed, but you can see the daily ranges here. So you just look at the option cycle you're looking at. Assuming there's an option cycle. If there's not, you can do there's calculations you can use to find any range, whether it be an hourly range or a 16-hour range or a yearly range or a weekly range. There's calculations you can use, but if you have an option cycle that expires at that point, then you can just use like the 0 DTE range currently now is, plus or minus 12 points from where we're going to open on the index. We generally don't we generally don't do that when the market's open, when the futures market's open, because the futures market's going to affect that. We should like to do when the market's closed, based on that. But that said, you can also do that real time live. Like if I have what's the options market expecting the asset to move in the next hour, right? So it's 2 hours before close. I can come in here and I can say, oh, the options market's expecting, so many points of movement in the next 2 hours. That doesn't mean that that's going to play out. That's just giving us a reference point of what the options market is expecting. If I, for some reason, from a technical standpoint, see a 2B reversal going on in a 2-minute chart, and I think that move's going to be bigger than that 12 points, that's where it makes sense to, do maybe call options or something like that, because it's, now I have an advantage to that. In other words, I don't always agree with the implied volatility market, but it's nice to know what the implied volatility market's thinking. So that's how that plays out. Do you not think there is a bearish 2B reversal as RUT went over the last local high? Yeah, there is, right? So I agree with that. And again, as a trader, you can decide how you want to trade that. Like, I'm always looking at what's my longer term doing versus my shorter term, and at what point are these going to conflict with each other? Like I might have very bullish short-term chart patterns playing out. I might be coming into a long-term resistance level and being overextended in the short term, right? So that's a good opportunity for things to go short, right? So so I may take that trade. And like I said, a lot of times it doesn't matter what direction you go in, and people get so caught up in direction. And it's like, I don't care so much. Like, I'm just going to take a shot at a direction. And if you've ever coached with me, you'll know that. Like, I'll take this trade here and I'll say, okay, well, we had a bullish breakout. We have a price pattern target that's somewhere. We'll point all that out and we'll say, all right, let's take a bullish trade off of this. And then how would we manage it? Let's take a bearish trade off of this. How would we manage it? And we'll play out both scenarios. Like the direction is like almost doesn't matter most of the time. So, over your long-term success, it might be something for that trade, but it's like, it's more important to understand when your price action changes and when your thesis, whatever it is no longer valid, to play off of that. For me, I agree with you, right? So like if I take a completely clear drawing, if I can find one on the Russell, right? I have a point here. This is my important point per se. Close under this point is a failure. I have a cup and handle pattern. If you, there's multiple ways you can look at this, by the way, right? So I can look at this here and I can say, this is a head and shoulders pattern setting up on the reversal, setting up on the Russell. And this is a normal pullback. And this is my, right, there's different ways I can look at this. This is my support level down in here. And horizontally, this is basically my major support level, and I can key everything into that. Fine, right? Not an issue. I could also look at it as this is a breakout of my level. A breakdown of this is a failure of the cut pattern, and I would tell you that I think that's valid. Although I might make an argument that the actual pattern's a slanted pattern and is here. But I could make that argument also. Like my point is there's a lot of different ways that we can look at this, right? Now, sometimes I can say, no matter how I look at this, right, I can look at this in 14 different ways, and this is my support point, and a breakdown of that's a problem, and an implication the market's going down. Right, if I look at that in all these different ways, or I can look at this in different ways and come up with a bunch of different levels. And I can play any of these levels in any manner that I necessarily want, but I will say that this is an important level on the index. I will say that it's not a particular point, it's this zone here on the index, which is also going to line up, right? So now I'm bringing stuff in, right? So now if I take my thing and I consider my zone that may be a little bit lower, this all of a sudden becomes a bullish point, right? If I start adding more, but I don't have to get like that crazy. And I can just say, okay, well, I consider anything under here bearish, and I think the market's going to break down into here. And I can take that trade, right? I can say, oh, this is a breakdown. A breakdown of that implies the market's coming here. That's a perfectly valid thesis coming up here in here. And I can take that thesis. My important thing is, when does that change? In other words, when should I be out of that trade? Because the thing is, we want to take trading structures that are low risk if we're wrong, or we can have some point that we get out of the trade if we're wrong at a relatively small loss. But if the market continues on, we make a lot of money, right? So, so we can play that. And we can play it that way, and we can use these points we can use this point as the reversal point. So in other words, I break down from here, I take the trade, assuming I can make some sort of a trade that makes sense, because sometimes depending on what we expect for price movement, we can't make a trade that makes sense. But if I can make a trade that makes sense with a move down to here for a bullish posture trade, then I might take that trade. And then if it turns around and we end up closing back over this level, then that trade's no longer valid, right? So it's more about understanding the price action that maintains validity in that position, and the price action that does not. Sherry, I guess you'll have to delay options trade for income, because I didn't realize it was like 9:30. So, but anyway, that's what's going on there. These are the types of things that we talk about in Market Outlook. I have to close up the meeting shortly. Just taking a look at IV from last week, really quickly. The chart patterns were bullish. The VIX last week was, actually, this is today, right? At least the VIX last week was bullish. The RVX was bullish postured. Our term structure is also bullish posture. Last 2 weeks ago, we were here, right? 17.8, 17.84, and these cycles, this one's irrelevant because it expires the following week. Our contango numbers are 346 and 2.02. And if we go to, actually, let's just overlay because of time. If we overlay this with here, you can see we've had a substantial drop of implied volatility, and we went further into contango on our price cycles. So last week's close was very bullish close. And like I said, this is just a surprise news event. To some extent, you have to look at a news event and say, is this like a long-term thing that's going to be problematic and can be determined in the next week? Or is it like a short-term thing where people are just kind of panicking because we have some news hit the market? And again, from the news context, I'm looking at this news as it's a short-term panic thing. I may be wrong, right? This may turn into a long-term thing, into a major market thing. We'll watch the pricing information come into the market to see if that looks like it's going to play out. But as of right now, like I said, I'm just treating this as a temporary pull down in the market, and I'm looking for places to add to long positions. I guess last but not least here is, let's go back to the SPX. Last but not least here is Michael saying, sometimes I also take a technical stop on a directional play, but if price bounces back bullishly, I get back into the same position, which is part of my trade plan before entering it, of course. Yeah, well, that's the other thing, right? So we watch the price action coming in. We say, okay, this should do this. Okay, it doesn't do that. I get out of it. And then if it turns back and it is doing it again, and it re-triggers, so you take the trade again. So persistence is one of the big keys here. And it's the same thing, even if you're adjusting your longer term trades. It's like, okay, pricing action opened up. It's telling me the market's going down, tells me it's going to continue down. I'm going to take that seriously. I'm going to make this adjustment. Okay, fine. When do we back out of that? That becomes the question. That's the problem that most people have. They don't understand the market movement. They just make this thing and they want to hold that for forever. I made this adjustment. I can't lose money in the adjustment, right? And they want to hold on to that forever. But the pricing information comes into the marketplace saying, oh no, we're going back up again. When that dynamic plays out, we want to take that seriously and we want to back right out of it and go back to the way we were. And yeah, you lost money on that little adjustment, but your overall trade is fine. It's just a minor impact on it. So anyway, things like that. So I hope everybody enjoyed today. I enjoyed presenting it. Options trading for income is obviously going to be a little bit late, so I'm going to get set up for that now, and we'll see you in about probably 15 minutes. Trade well, everybody, and hopefully you consider joining us on Market Outlooks. A lot of great information. All right, talk soon.